Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco and my partner, Hari.
Hello.
How are you, Hari?
Good. We're surviving the global pandemic.
The global pandemic. On top of that, I'm living here in California, and the wildfire is absolutely insane.
Yeah, I imagine
you've seen photos, right?
Yeah,
of California or San Francisco.
I imagine it looks like a orange haze all day long.
All day long. It's actually a health hazard to go outside now because of the microparticles from all the. It's not good.
Well,
not good.
Maybe it'll kill the COVID.
yeah, exactly. Anyway, trying times for many people. Trying times for this earth. Everybody, really.
But we're at all-time highs in the stock market. So
all-time highs in the stock market.
The world is literally on fire right now, but we're at an all-time high. So
yeah,
it makes a lot of sense.
Crazy. So, in this episode, we will look at this company called Darden Restaurant. This was one of the companies that was recommended to us by one of our listeners. Again, just quick housekeeping items. I know we talk about this all the time, but just so, if new listeners are listening to this podcast, 3 things. If you want checklist, we go through checklists all the time. So if you want checklists, email us at info@valueinvestor.org. Slack channel, if you want to be part of the community, you can talk to us directly, talk to the community. Again, info@valueinvestor.org. We can send you an invitation. And then lastly, if you'd like us to review your companies that you had in mind, for example, Darden Restaurant or anything else that you have in mind, you can also email us at info@valueinvestor.org, and we will put them in our backlog, and we'll consider them for future episodes. All right. Should we get started, Ari?
Yeah, let's do it.
All right. Before we do that, let's do a quick disclaimer.
Yeah, this is the Value Investor TV podcast. We're a podcast that helps you understand the concepts behind value investing. We don't know your specific financial situation, nor are we financial advisors, so please consult the appropriate advisor before making any investment decisions.
All right, let's go through the checklist here. All right, the first question, what do they do, Hari? What is a Darden restaurant? What is it?
So Darden Restaurants is a multi-brand restaurant chain that operates, mid to upscale restaurants in the U.S. and Canada. Full service restaurants in the U.S., Canada, and some smaller presence in the rest of the world.
All right, there we go.
See, I can do it, Becco. It's not that hard. You can just one sentence. You don't have to tell me the entire.
I was gonna get after you if you exceeded that two sentences.
No, I was like at 1.5, so I'm good.
All right, so full service restaurant, big presence here in North America, some small presence across overseas. And I think their biggest kind of most well-known restaurant is Olive Garden. Is that right?
Right. So they operate multiple brands. Olive Garden being their largest. Longhorn Steakhouse, Cheddar's, Scratch Chicken, Yard House, Capitol Grill, Seasons 52, Bahama Breeze, and Eddie V's. So just as a little bit of so they own all but 62 of their 1,804 restaurants are owned by the company. 62 are franchised, and this was a company that was actually originally under the Red Lobster name. They were acquired by General Mills in 1970, and then they were spun off in 1995 as from General Mills. So, and have been operating under independently of General Mills for the last 25 years.
I see.
And just a couple other things to kind of give you a scope of what this company is. These restaurants that they offer are called full service restaurants. So there is quick service, There's fast casual, and then there's full service restaurants. So full service restaurant means you have a waiter that serves you the food, takes your order, and so on. Quick service is something like what you would consider a fast food place like McDonald's, and then fast casual is you order at the front, and they either deliver the food to you at the front, or you come and pick it up, or somebody drops it off at your table, but there is no waiter type thing. So this is in the restaurant business. This is the highest level of service.
Makes sense. All right, let's go to the second question here. Does the company have a competitive advantage? And we go through a checklist here: brands, network effects, switching costs, low cost, intangible assets. So let's just go through the list. Brand. Do they have a brand competitive advantage?
Yeah, I think if you live in the United States, you've probably heard of or eaten at one of their restaurants. Olive Garden being the most popular. They have a fairly strong marketing campaign, advertising campaign. And each one of their brands is kind of differentiated from each other. So most people wouldn't know that they're associated with each other, but Olive Garden, Longhorn Steakhouse, Cheddar's is kind of like a Chili's. They serve American food. Those are the three that are probably the most prevalent in the United States. The other ones are kind of smaller chains, but they're more upscale. Yard House, Capital Grille, Seasons 52, Eddie V's. These are, these number in the, under 100, restaurants. So they may not be as popular, but, when you look at them as a whole, I've been eating at Olive Garden for, 25 years or more. They've been around for a long time. I think they generally have a very good reputation, and that brand, everybody can remember the Never Ending Pasta Bowl, or their various promotions that they do. The breadsticks, the salad. Everybody has a favorite thing there. So it's a pretty popular restaurant chain. I don't really know of too many people that have a negative opinion of it, or if they do, it's they're in the minority. So I would say, if anything, this company's strongest value proposition to the customer is that they have a strong brand, and I think part of that branding is to maintain their reputation. They take their customer service very seriously. They mention in the annual report how much their food quality means to them. I am not aware of any of their brands having any food quality issues like Chipotle had a few years ago. So they take their customer service very seriously. I think it's reflected in their business model, because they see their reputation as being very important to them. So I think brand is the strongest of their moat.
I see. All right. Let's move on to network effects. Is there any network effects?
No, there's no benefit here of network effects, because they're not really a tech company. They have limited benefit here from of their name recognition. So I don't see that as being a factor.
All right. Third one, switching cost. Is there any switching cost incurred on me if I go eat at one of the Darden restaurants versus going to somewhere else?
No. So obviously, if you're free to eat at any restaurant you want, they don't come and break your kneecaps if you switch restaurants. So there's no benefit there, and they don't have, anything other than you need your fix of breadsticks. That's the only thing there.
All right. Next one, low cost. Do they have low cost moat?
So I will say that it's not necessarily that it's a low cost moat. They are a very profitable business, very profitable enterprise. I think you could argue that they are able to charge a premium for their food because of their brand and their quality. And I think that because of their scale, that allows them to buy. Um, they talk about their supply chain that they buy from 25 different countries. They have I'm sorry, they have greater than 1,500 suppliers from 35 different countries, and they use long-term contracts to help manage their costs. And they own their own distribution company called Darden Direct Distribution Distributors, but they use third-party companies to deliver the food. So they have some scale that allows them to keep their costs low.
Hmm. Do they have any? I'm just thinking through the brands that this company has, Olive Garden and all these other companies. Is there any sort of thread, like a common thread of these restaurants, or is it just kind of, there's no commonality here?
Well, so what they do is, several of these brands have been, Olive Garden and Seasons 52 and Bahama Breeze were all companies or brands that they started. They've acquired the rest of them. So Longhorn, the latest one acquisition was Cheddar's in 2017. Prior to that, Longhorn Steakhouse, Yard House, Capital Grill, and Eddie V's were all acquired between 2003 and 2017. So in the last 20 years, they've basically acquired many of these brands. So I think they've integrated the supply chains once they've come on board to save money. They talk about their management having a training program, I think to maintain the quality, and surprisingly, their managers stay there for a very long time, right? So I think this is a part of their moat, is that the employees are happy working there. That allows them to maintain a high level of customer service. So 13 years, I think, is how long their average time that their management team has been with the company. So, they do this 12-week training program, and they kind of, keep them there for a very long time.
I see.
And then one other factor I think that'll, plays into this mode is also, I don't know if you've been to a Olive Garden in the last, few years. They have these kiosks where you can check out, and, they talk about their own data center where they keep track of what are the trends of things that, people like, food wise and stuff like that. And they use that to monitor and, do promotions and also, bring people into the restaurant. And I think that's largely been successful because they use the food, the information that they collect on the food to make, to do promotions and things like that. So I think it is, this is something that they are able to lower their cost, over a large scale that, a mom and pop restaurant that they would compete with doesn't have, right?
Mm-hmm. Makes sense. So some degree of, maybe not low cost as a mode in and of itself, but baked in economies of scale because they have all the logistics figured out for all these different restaurants.
Correct.
All right. So the last one here is intangible assets. Do they have any intangible assets that you would consider as a competitive advantage?
Well, I mean, I think we talked about the high quality management training that they do and keeping track of their management. Keeping them there for a long period of time. They have their executives are with the company. Their current CEO was with the parent company of Longhorn Steakhouse. So Longhorn and Capital Grill were part of this company called Rare Specialty Foods, and the current CEO was a president or an executive there, and he kind of, when they acquired them, they kind of moved up the ranks and is now the CEO for the last 5 years. Mm-hmm. So I think they've maintained a good corporate culture, and have been able to maintain that for a long period of time. So I think that is a intangible asset. So it's a very, very competitive business, right? Right. Very, very difficult to edge out anyone. But I think as much as they have done that.
Sounds good. Okay, so just to quickly recap, brand, obviously, I think that's a big one. Everyone knows Olive Garden. Everyone knows Longhorn Steakhouse. No network effect, no switching cost, but some degree of low cost baked in because of the economies of the scale. And then lastly, intangible asset because the corporate culture and the management has been there for a long time. Industry veterans, they know what they're doing. So, that sort of summarizes all the moats that you talked about there, Hari.
Yep.
All right, perfect. Let's move on to the next question. How durable is the competitive advantage?
Well, I mean, prior to COVID, I would have said it's a pretty solid, thing, right? People are going to restaurants. They've been going to restaurants for a very long time. You know, most restaurants have a limited lifespan, less, 5-10 years at most. Um, Olive Garden has survived through a very long, stretch of time, right? They've been around for, 40 years at this point. So I would say 40 plus years. I would say that the likelihood of them, they're going to survive COVID. I think the moat will stay intact. I don't think this is, I know people who still eat at Olive Garden, through DoorDash or whatever the various services are. So it's going to be a temporary hit for them. And I don't see that the moat is really going to lose out. They may have to close some restaurants because of underperformance, but I think that those will come back when the economy comes back.
Okay. All right. So the next question: what are the company's long-term prospects and runway for growth?
So they said up until uh, Q3. So Q3 was prior to COVID. Their 2020 fiscal year ends in May of 2020, or May of every year. But sales were up 4% through the third quarter, and the summer months actually represent, seasonally one of their lower. It's the second lowest. Fall is the lowest, and then winter and spring are the highest. Times that people eat out, and so this is not a fast growing business anymore, right? If you think about a restaurant chain, they have numerous brands that they could expand through. Cheddar's is not in many places. I don't even know if there is one around us in Houston, or if it is, it's out in the suburbs. And some of these others like Yard House and Bahama Breeze, they're not in, anywhere near me. So part of this is kind of, there is room to expand in these things, but they don't represent, Olive Garden by itself is more than half of their stores. It's not going to be easy to, I'm sorry, it is less than half their stores, but Longhorn Steakhouse is already 500 stores. Cheddar's is only 165. So I don't think Cheddar's and Olive Garden really compete with each other. So they could theoretically ramp up, their Cheddar's locations to kind of hit some of the similar level, but they didn't actually talk a lot about that. So it's hard for me to say what the final tally is for restaurants. But I think 4 to 5% is probably what we're going to have to live with for a company like this.
I see. And you mentioned that there's a small presence outside of the U.S. and outside of the sort of the U.S. North American market. How does that play into the long-term prospects here?
So they don't really talk about those. U.S. and Canada seems to be their primary focus, and it's really the U.S. And they mentioned a few restaurants in the Philippines and other places, but I don't see those as, I think they probably did those as test runs and not, kind of long-term, growth things. So
I see. Okay. Moving on. Does the company require a lot of capital reinvestment to maintain its business? Can it grow without any further reinvestment?
So, this is an asset. It's not heavy, but it has assets that need to be replaced. They remodel restaurants all the time, try to make the decor, the Olive Garden that I've, when I was younger, I grew up with, I've seen them remodeled it at least 3 times, in the last 30 years. So, they've clearly are keeping things up to date. They've maintained a high level of, quality in their stores. So that's where they spend. They mentioned that it takes about 6 months to open a new restaurant, but they've kind of, the number of openings is pretty low. So there's a net
Mm.
new opening of about 18 stores. I think largely because of COVID. Uh, so it's I'm not super. Um, we're talking about for a company that has about 1,200. So 1.2 billion in cash flow from operations. They're generating about 450 million in capex. So they do require some amount of money. About a third of their cash flow goes back to maintenance.
Hmm. I see. And that sort of matches up with the depreciation.
It's actually a little bit higher than depreciation, but they don't break out their capex as growth and otherwise. So what I would say is that that number seems reasonable given their expenses and so forth.
I see. All right. So moving on. So actually, just to recap really quick, it sounds like require capital reinvestment of about a third is what you're seeing here.
Yep.
In terms of capex. All right. So moving on, does the company have any red flags in terms of relationships, customer, suppliers, employees, regulators, community? Is there anything else that you would see that you want to highlight here?
So no, not really. I mean, one, COVID was clearly a big problem in terms of sales. During the fourth quarter, their revenue was down by 43% due to COVID. By the end of the Q4, so end of May 2020, 89% of their stores had reopened, and they were back to break even. So they had to furlough employees. They had some issues there, and they had to delay non-essential capex. They essentially suspended their dividend, their share repurchase. So my biggest concern there is that are they going to be able to bring back employees quickly? When they and I don't think we're seeing the 100% of revenue back to where it was pre-COVID. So I imagine that the people are going to want to come back to to eat when things get back to normal, but they are not. That would be my only concern.
Mm-hmm. I mean, it's impressive actually, to me at least. 89% reopening, and then they're breaking even already. Right? I mean, I think that's a pretty impressive number.
Well, and I think that was largely because they were pretty early on furloughed their employees. I mean, obviously, what do you do with a hourly worker who is when the restaurant is closed, right? Your wait staff, those folks aren't really going to be able to do much. So the people that were working were the people preparing the food. Their sales folks, or I'm sorry, their executives and so forth. Their general managers, they were all working. So I don't really see a lot of. But like I said, I don't see any problems with regulators. I don't see any problems with the community. They seem to have a good reputation. So, no red flags.
Sounds good. Okay, awesome. That brings us to the end of the first episode. We talked about Darden Restaurant, what it is, competitive advantage, the brand, the low cost, intangible assets, and then the aspect of the capital reinvestment to grow the business, and then no red flags in terms of relationships. So that sort of covers the basis for the first part of this, going through just the business side of Darden Restaurant. In the second episode, we will dive into financials, management, and valuation. So stay tuned for the next episode if you want to continue learning about Darden. All right. Any last words, Hari?
No, I think in the next episode, we'll just kind of talk about the valuation and some other stuff that, about profitability and things like that. So stay tuned.
Awesome. Thanks, everyone.